You're listening to the Finance Magnates Daily Brief, brought to you by Finance Magnates Intelligence.
Today's Monday, the 17th of August, 2026, and these are our main stories. XTB examines a systematic internaliser model, Bitpanda faces a Mica fine in Austria, and the Australian regulator removes almost 20,000 AI deepfake scams. To begin today, XTB is examining whether systematic internaliser arrangements could help lower the cost of executing stock and ETF orders while allowing the broker to maintain its zero commission offer. The broker currently sends cash equity and ETF orders to regulated markets, but is considering other execution routes as these products become a larger part of its revenue diversification strategy. The model could involve keeping an inventory of liquid securities and executing client orders against that inventory, potentially reducing exchange and other execution costs. XTB has not decided whether it would become a systematic internaliser itself or use an external provider, and no launch timetable has been given. The broker currently charges no commission on real stocks and ETFs up to €100,000 of monthly turnover. Meanwhile, Austria's Financial Market Authority has fined Bitpanda €70,000 for several breaches of the markets in crypto assets regulation, or Mica. The regulator described the decision as the first legally binding Mica penalty decision it has published. The case relates to disclosure and marketing requirements for a crypto asset. The FMA said Bitpanda failed to submit a required white paper at least 20 working days before publication, while marketing material appeared before the white paper was published. That material also lacked required statements about regulatory approval and did not include a telephone number or email address. The regulator did not allege customer losses, and Bitpanda's Austrian crypto asset authorization remains listed. The proceeding was closed through an expedited process under Austrian law. On the fraud front, Australia's securities regulator says it removed more than 19,400 online scams during the 2026 financial year, an increase of 182% from the previous year. ASIC warned that generative AI is making investment scams more convincing, with criminals using deepfake endorsements, fake websites, and fabricated reviews. ScamWatch reports linked the most impersonated public figures to $7.4 million Australian dollars in reported losses during the year. ASIC also removed 5,476 phishing links, 7,051 fake investment platforms, and 3,106 cryptocurrency investment scams. The regulator said scammers can also copy legitimate financial businesses and reuse Australian financial services license details, making it harder for investors to verify whether an offer is genuine. That's your Finance Magnates Daily Brief for August 17th, 2026. For the full stories, head to financemagnates.com. We'll be back tomorrow. Stay sharp.